What's up everyone, Ben with the BTC Sessions here, and this is your daily session.
Hodl that Bitcoin.
Before we dive in, just a quick reminder, do check out my website, btcsessions.ca. There you can reach out to me to book your own BTC session. We can chat Bitcoin, wallets, proper security, really anything you like. All you need to do is scroll down to the bottom and there is a contact form that you can fill out. Besides that, be sure to check out my Teespring link where you can grab some swag, the Bitcoin Twitter shirt, or something with my big dumb face on it. That is there in the links down below the video. And without further ado, let's dive into the news. Now, the first thing I wanted to touch on is this report by Bitwise Asset Management. And this was done to the Securities and Exchange Commission in the US. These guys are putting together the Bitwise Bitcoin ETF trust. So they want to be listed, they want to list an ETF essentially. And so they are addressing a lot of the issues that the SEC has with listing a Bitcoin ETF. There were a lot of worries that the market is too immature, that the volumes are a problem, that it's a very it's kind of, the market's all over the place and it's immature. And so these guys, they go through and they really tear apart everything when it comes to market manipulation, what the real Bitcoin market is, real versus fake exchanges or fake volume. They talk about liquidity, arbitrage, valuation, all this stuff. Now, there's a lot to take in here. I will link this down below. It is a lengthy read, but what did I find most interesting about this is the dismantling of some of these fake exchanges and the website coinmarketcap.com. So right here, they're addressing the issue of no basically global price, that they say that public perception holds that Bitcoin market is in fact uniquely disorderly and inefficient. So this is a rational response to the information most people have at their disposal. For example, leading data aggregators show prices on different exchanges separated by hundreds of dollars. And so up here you see CoinBene is one of the top volume exchanges reported by CoinMarketCap, and it's got a price of $35.62, and then you see stuff down here, $32.03. So you know, $300+ between the two exchanges reporting on volumes and pricing. And so you can see the exchange breakdown here. You can see all of these various exchanges, and you can see there's a reported 6 billion daily volume average. Okay, so they are basically getting at that this data is completely wrong, and the fact that everybody is quoting this website CoinMarketCap, I've even mentioned it here multiple times, and they're saying that all of this data is hideously misrepresented, that most of the volume there does not exist. And so they go through examples of what real exchanges with real volume actually look like, and they point out specific things like, okay, well, there was more buying happening today, and so you can see there's a lot of green, and then there's the occasional red where a sell order gets picked up. They go through the amounts where you can see that the offers vary over time, but you'll see a greater than random number of round size trades, like a full Bitcoin, 0.6, 0.1, because people are less likely to trade 0.821 or some random number like that. So they go through all of these various points and say this is normal activity. And then they say, well, but look at some of these, and they really lay into CoinBene, which is supposedly, it has 18 times the volume of Coinbase Pro, supposedly. But they go through and they say, well, hey, look at these trades. Look at how before on Coinbase you saw it was a mostly green day, and then there was sporadic red here and there. Whereas they say, hey, look at this. it's perfectly listed, whereas green, red, green, red, green, red, like always a sell to a buy, always matched, always listed, you know, and they go through and you can see really random numbers listed in the buys and the sells. And they even go into saying like, hey, look, the smallest trade here is for 0.43 Bitcoin, or around $1,400, whereas Coinbase Pro, which has a lot of volume, you see trades as small as $5 regularly. And they say there's no round number trades, despite the obvious behavioral reasons for their existence. They get into quite a bit. They say that it's ridiculous that there's a spread. So on CoinBene, there's a buy and sell spread, so nothing in between 32.39 and 32.74. So a almost $35 spread between the bid and the ask, where on an exchange that supposedly has exchange volume 18 times the size of Coinbase Pro, whereas with Coinbase Pro, the spread is only 1 penny. Why would an exchange that has 18 times the volume have a spread that is 3,400 times larger if it was an actual liquid market? So they go through and they really just dismantle the hell out of all of these exchanges that have fake volume. And they just straight up say, all of these exchanges are fake. But if you look to the real exchanges that have real volume, then you can see this is actually a very mature and probably one of the most efficient markets on the planet. And they even go to show, I just got to find this one tidbit about the total volume. Okay. So reported volume, 6 billion worldwide every day. They think that the actual volume of cryptocurrency trading is actually around 273 million a day. So 4.5% of reported volume is real and the rest is fake. And they say that this is actually healthy given Bitcoin's market cap, and the inverse would actually be kind of scary. And so they say, well, look at gold. Gold has a market cap of around $6.7 trillion, and the spot volume every single day is around $37 billion. So about 0.5% of all gold is traded every single day. Okay, and when you extrapolate that for Bitcoin, Bitcoin is around $70 billion. The spot volume per day, if it's around 270 million, well, that puts it at a little less than 0.5%, so 0.4% every single day. And so basically what they're saying is, if the $6 billion being traded in Bitcoin every single day was real, that'd be pretty scary, because that would imply that between 8 and 9% of all Bitcoin was changing hands every single day. Essentially, everybody would be playing hot potato, or nearly 10% of the market would just be looking to trade back and forth and get rid of their Bitcoin every single day. But realistically, less than 0.5% of all Bitcoin holders are actually actively trading, and everybody else is holding on to it, as whether it's long term or whether they just want to hold it mid-term, doesn't really matter. But it's not being actively traded, which gives it, in my mind, much more legitimacy that people want to hold on to it, and they're not just tossing it around for speculation's sake. So I highly recommend you take a look at this report. As I said, it is lengthy, but there's some great insight here, and I really commend the guys at Bitwise for putting this together. And to complement that, take a look at this Medium article by Nic Carter, The Dark Underbelly of Cryptocurrency Markets, and he goes into many of the same questions and starts to talk about what's really happening behind the scenes at some of these exchanges. But with that, let's move on to the next story of the day. So, CEO of Square, CEO of Square and Twitter, they're hiring open source developers to work on the Bitcoin protocol. So just to sum up here, so Jack Dorsey, CEO of Twitter, he's been a major proponent of Bitcoin lately. He's been experimenting with Lightning Network. He took the Lightning Network torch and has been all over the place talking and excited about Bitcoin, and seems to be leaning relatively Bitcoin maximalist as well. He's not super interested in a lot of the altcoins, at least apparently, thus far. I guess we'll see. But so this was his tweet the other day. Bitcoin Twitter and crypto Twitter. Square is hiring 3 to 4 crypto engineers and 1 designer to work full-time on open source contributions to the Bitcoin and crypto ecosystem. Work from anywhere, report directly to me, and we can even pay you in Bitcoin. Introducing Square Crypto. Why? And then he goes into why they're doing it. So very, very interesting. I think this is a great trend to start. I think it sets a really good precedent, because here's a company that was built on the fundamentals of the early internet and this quirky kind of nerdy thing that not a lot of people were working on, and it gave rise to this behemoth that many of us on Bitcoin Twitter use now. And so he kind of beckons to that. He says, Square has taken a lot from the open source community to get us here. We haven't given enough back. This is a small way to give back, and one that's aligned with our broader interests, a more accessible global financial system for the internet. I love this technology and community. I found it to be deeply principled, purpose-driven, edgy, and really weird. Just like the early internet, I'm excited to get to learn more directly. So, I mean, kudos to Jack for doing this. I hope we see more companies start to support and kind of, I guess, help grow this Bitcoin ecosystem, because a lot of these Bitcoin developers, they're doing it for no real compensation. They're just doing it because they love the ecosystem and they want to contribute and they want to build something for a better tomorrow. And so when you have somebody like Jack that says, hey, like, these guys are deserving of capital for what they're doing, more power to them. So good on you, Jack. Okay, so up next we have this story about the Wall Street Journal here. They're being called out for some flawed investigation. So back in, when was it, last fall of 2018, they claimed that $9 million worth of cryptocurrency was laundered via Shapeshift, the online exchange where essentially you could just trade any digital asset for any other one that they listed, more or less instantaneously, without having to reveal any KYC, AML, anything about you. Now, I'll read a couple quotes here. So, by tracing alleged laundering through no more than 2 intermediaries before reaching an exchange, the Wall Street Journal's stated methodology was fundamentally flawed. The tracing of any funds, illicit or not, over the course of multiple transactions is extremely difficult, and presenting the total contents of subsequent wallets as illicit is forensically unsound. So, blockchain intelligence group Cipherblade is the one that is looking into this at the request of Shapeshift. And so what they're saying is the Wall Street Journal categorized all of the money coming out of particular wallets as illicit, but in reality, the illicit funds had been used in an illicit manner before it hit those wallets. So let's say that somebody, an example with cash, somebody uses $20 to snort a line of Coke or something, and then that money gets passed to somebody at the 7-Eleven, and then the 7-Eleven gives it out as change to somebody else. And that $20 bill is now sitting in your wallet, which is full of other $20 bills. Essentially what Wall Street Journal did here is say that all of the $20 bills in that particular wallet are now illicit and subject to money laundering. So they've just categorized, they put a blanket statement on all the funds in a particular wallet when really it doesn't necessarily add up. So furthermore, they go in to say, of the Shapeshift addresses which receive Ethereum within 3 hops from the initial dirty addresses, less than half of the Ethereum traded through them are tainted. Using the most generous assumptions, this is still only 23 0.53% of the Wall Street Journal's claimed $9 million. Furthermore to that, of the 5,523 shapeshift addresses in the Wall Street Journal spreadsheet that actually correspond to trades, 30% of the Bitcoin and a mere 5.5% of the ETH that was sent to those addresses were exchanged for Monero, whereas they were claiming much more than that. So essentially what Wall Street Journal had said was that more or less people were trading these illicit funds in exchange for privacy coins like Monero, but you can see from those figures that wasn't really the case. 30% of the Bitcoin and 5.5% of the ETH actually went to Monero. So all in all, not a great look for the Wall Street Journal there. Hopefully this contributes to better reporting, but I kind of feel like not. So people are just going to have to keep on fact checking. And the nice thing with cryptocurrency is you can. So most blockchains are open and you can just audit in real time, as we saw in the first story, where you can go in and take a look at the exchanges and you can start to actually piece together a pretty good picture of what's really going on. So very interesting here, but hey, Wall Street Journal, do better. Anyways, guys, I'm going to wrap it here. I hope you all have had a great Friday. Quick reminder, do check out my website. I've also done a little update to the products page. Obviously, the merch stuff is there. Cool Wallet S I've talked about before. And then NordVPN I started playing around with, so if you want to check out that, then you can. And Teespring link. And beyond that, if you enjoy what you see, if you're new to the channel, please do subscribe. Smash that like button because it always helps get this video visible. And turn on that bell notification because whenever this airs for the first time, I'm always in the side chat there, so be sure to hit the live stream and join in the chat. I'd love to chat with you as well. And if you really like what you saw, you can drop me a Lightning Network tip at tippin.me. I've got a link for that down below, and if you don't know how to do it, I did create a demo video and I will link that in the cards and down below as well. But until Monday, I suppose, I will see you guys next time for your daily session.